2023 is drawing to a close and it's been an eventful year to say the least. Hello and welcome to this special broadcast, Rewind 2023, where we take a look at some of the key milestones this year. It's been a year of big changes for India's banking system. Several stalwarts bid goodbye. Interest rates were sharply in focus as monetary policy authorities around the world embarked on a rate tightening cycle. Lata is here with the year that was for Indian finance.
The standout feature of the Indian financial sector in calendar 2023 is that the very face of Indian banking and finance literally changed in the year. The old stalwarts Deepak Parekh and Keki Mistry exited the scene, handing over their baby, the giant HDFC, to Sashi Jagdishan's HDFC Bank. A younger veteran, Uday Kotak, also handed over the baton at Kotak Bank to Ashok Vaswani. The HDFC merger into HDFC Bank is going to eventually alter equations within the banking sector. The HDFC Bank loan book, which grew from around 16 trillion rupees pre-merger to around 23 trillion rupees post-merger, means SBI's loan book, which used to be double the size of HDFC Bank's loan book, is now only 1.5 times bigger than HDFC Bank's loan book. Literally, the gap between private and public sector banks got a bit narrow. But the change has taken its toll. HDFC Bank and Kotak Bank were the stock market's underperformers of the year, with their shares nearly flat, while a clutch of old private banks like CSB, J&K Bank, Karnataka, and some PSU banks like PNB, Central and Indian Bank rose between 50 and 100%. Indeed, there were mergers and changes in the NBFC space too. The year saw the rise of a consolidated Shriram Group, merging Shriram City Union and Shriram Transport, while Jio Financial emerged on the bourses as a separate listed entity as a Reliance Group NBFC. Its consolidated net worth of 1.14 trillion rupees is likely to make Jio Financial have a seminal impact on the NBFC space, but that may be the theme of 2024. Coming to P&L performance of banks, it was a solid year for banking performance. The banking sector's profit grew by a solid 26% in FY23 to 2.28 trillion rupees, while in the first half of FY24, it did even better, growing its profit by 50% over the previous first half. Public sector banks did the best because of probably their weak base. PSU Bank's profit rose by 62% in full year FY23 and by 66% in the first half of FY24 over the previous first half. Bad loans, they continued to decline rapidly from 5.8% of total assets in FY22 to 3.96% as of March 23 to 3.33% as of September 2023. Likewise, net NPAs have also fallen from 1.7% to 0.97% as of March 23 to 0.78% as of September 2023. Banks continue to improve their margins. Net interest margins, or NIMs as we call them, rose from 2.92% in FY22 to 3.16% FY23, but after rising even further to 3.26% in Q1 of the current year, NIMs fell a bit to 3.21% in the second quarter. The story of falling net interest margins is the consequence of the Reserve Bank's interest rate and liquidity policy this year. The central bank, after raising rates in every single policy from April 22 to April 2023, unexpectedly stopped the hiking cycle, again proving to be ahead of the Fed, which stopped its hikes in July 2023. But an ugly 7.44% inflation in July in India, thanks to tomatoes and some disturbing trends in monsoons, El Nino and all that, led the Reserve Bank to tighten liquidity in the banking system. The Reserve Bank announced an out-of-the-box incremental cash reserve ratio, ICRR as it's called, of 10% on all deposits that banks got from May 29th to July 28th. This squeezed out over 1.1 trillion rupees from the interbank market, pushing up the call rates from 6.5% to 6.75%, which in turn pushed up interest rates throughout the industry. The blow fell most cruelly on HDFC Bank, which had raised almost half the deposits of the entire banking sector from May to July to back the loans of HDFC, which was merged into it from July 1. The ICRR was withdrawn, thankfully, in September 8th, but not the tight liquidity stance. Many suspected that the Reserve Bank was seeking to keep Indian short-term rates higher than the US yields, where the 10-year had shot up to 5% in October, triggering fears of a run on emerging market currencies. The Reserve Bank kept the rupee rock solid, stable with massive intervention, but by mid-December, the US yields had waned as the Fed had pivoted. But tight liquidity wasn't the only salvo fired by Reserve Bank. In November, sensing a sharp surge in unsecured loans, like, credit card loans, personal loans, the central bank raised the risk weights to be maintained on such loans, making the loans expensive. Loans from banks to NBFCs also became expensive, but the biggest casualties were the fintechs who specialize in unsecured loans. Banking stocks were not the toast of 2023 like they had been in 2022. Bank Nifty had returned a handsome 21% in calendar 2022 when Nifty had risen by only 4.3%. But Nifty has returned a handsome 17% in 2023. Bank Nifty has been an underperformer with just about 10% gains. And this despite PSU Bank Index giving a 28% rise in 23. The culprits are clearly HDFC Bank and Kotak Bank, both almost flat in 2023 as they struggled with merger in one and leadership transition or uncertainty in another. Will these two banks show mean reversion and emerge from their uncertainties? Will growth, that is both credit growth and bank loan growth, maintain the tempo of 2023? Will Reserve Bank follow the Fed with a dovish pivot at some point and cut rates? Those will be some of the themes of 2024.
Well, Lata, many thanks for joining us. That was the story of the bank and finance sector in 2023. Now, IPOs were the talk of the town this year. Investors have made a beeline to get a slice of the primary market action, but one segment stood out: the small and medium enterprises. Hormuz is here to wrap up the SME IPO frenzy for us. Take a look.
2023 has been the year of IPOs. But today, we'll shed the spotlight on a segment where investors have taken the IPO frenzy to another level. I am talking about SMEs. This year has seen close to 60 mainboard IPOs, but the count on the SME side is a lot more. So far, we have had 164 completed and listed SME IPOs, a number that is 50% higher than 2022 and 3x of what we saw in 2021. Now, why do I say that this has been a frenzied year for the SME IPOs? Here are two examples that prove this point. First, together, these companies have raised a total of 4,425 crore rupees. However, in the process of doing so, they ended up receiving bids worth nearly 3 lakh crore rupees. Another example of that is Chaman Metallics, which was the first SME IPO this year. It planned to raise 24 crore rupees. Instead, it ended up getting bids for almost 5,000 crore rupees. Now that is proper frenzy. Now why is that number significant? Because the amount of bids received by one Chaman Metallics is more than the combined sum raised by all of these 164 IPOs so far. Now Chaman Metallics was subscribed over 200 times, yet it does not feature in the 10 most subscribed SME IPOs of the year. That list includes companies like Kaha Packaging, which was subscribed 730 times, Net Avenue Technologies, which was subscribed over 500 times, and then there was Srivari Spices Foods and Madhusudan Masala, which saw subscription of over 400 times. Of course, one needs to keep in mind here that the IPO sizes are significantly smaller compared to mainboard issues, and hence the number will appear to be shooting through the roof. But that also does not mean that there is no demand. There is plenty of it. Take a look at this. Accent Microcell was a 78 crore IPO and it ended up getting bids for 19,000 crore rupees. Same is the case for stocks like Srivari Spices. A 9 crore IPO gets bids for nearly 3,000 crore rupees. Now, we spoke to you earlier about these insane subscription figures, but do they translate into strong listing gains? In an ideal case scenario, they should, right? But in some of these stocks, they haven't. Now, stocks like Transway Logistics, Tridya Technologies, High Green Carbon, all of them saw hefty subscription figures, but they listed either at their IPO price itself or even at a discount of as much as 20% to their issue price. Now, even Kaha Packaging, which is the most subscribed SME IPO of the year, is up only 15% from its IPO price. Stocks like Madhusudan Masala, despite the 450 times subscription, is up only 8% from its IPO price. This frenzy, FOMO, whatever you'd like to call it, has resulted in the overall market capitalization of SME listed stocks to cross the 1 lakh crore rupee mark this year. However, there are some risks associated with this too. SME stocks are not widely owned, they are thinly traded, and hence the possibility of manipulating them is much higher than their mainboard large cap peers. So 2023 has been the year of SME IPOs. They came, they saw, some of them conquered, while some of them left investors with lessons to learn for the future.
Hormuz, many thanks for joining us. Well, 2023 clearly FOMO as far as the SME IPO space was concerned, but not quite for M&A. In fact, 2023 was a year of muted M&A activity, but there was a flurry of block deals with private equity and venture capital exits and promoters bearing stake in many cases. Nisha standing by to wrap up the big block deals this year.
It's been a blockbuster year for deal makers, as it turned out, as a year of block deals, with the M&A activity being quite muted. Around 80 blocks with a total value of a whopping $15 billion changed hands in the year, largest ever seen in the Indian markets. Now, private equity, venture capital, they made their exits worth around $12 billion in stocks, and they were spread across sectors like tech, financial services, industrials, as well as IT. Baring Asia's large exit from Coforge is a game changer, as the investors for the first time saw enough appetite in the Indian markets to sell out completely. And this has lifted the confidence of foreign investors. Besides this, many investors have been seeing significant blocks this year till the last days of December. Even the promoter share sales stand out in terms of large blocks like Vedanta and Interglobe Aviation. But investor exits are an emphatic theme for the deal street this year, and the big one, SoftBank, ranks first with close to about $2 billion worth of exits, and BPEA EQT's Coforge exit marked the top exit by a PE firm on the exchanges. Other bulge bracket private equity firms also capitalized on the equity window provided by our Indian market. What also stands out is that a lot of new age listed companies saw a series of block deals from multiple investors. Zomato, Paytm, Nykaa, etc. stand out on the list of shares constantly seeing block deals throughout the year 2023. Now, let's talk about the PE investments. There are some significant deals, and topping the list is Temasek's investment in Manipal Health. Also, Baring Asia made a big bet on HDFC Credila with ChrysCap, and then there are a bunch of these over $500 million investments by the foreign funds, and mostly panning across the healthcare verticals, which stands out as a clear theme in 2023, especially hospitals, a theme which will continue in 2024 as well. While M&A of high intensity has been muted, but there are some significant deals on my list for the year as well. With the buyout of Route Mobile in tech space, Nirma buying Glenmark Life Sciences is a significant deal between two Indian promoters. Now, from the conglomerate space, Titan picking Carrot Lane in its shopping cart stands out for the omni-channel theme, which really continues this year as well. And financial services is another space very active on the deal street, and from there, AU Small Finance Bank's bet on FinCare Small Finance Bank stands out. So this year, the excitement on the deal street came more from the deals undone. Cipla stake sale, a story I broke earlier, caught a lot of attention, but is now in cold storage. Another break from me on M&M's investment in RBL Bank. This raised a lot of questions and the future is going to be keenly watched. But the biggest miss for 2023 on the deal street is the 2-year-long saga of the largest media merger between Zee and Sony, which continues in the new year.